Welcome back, everybody. Welcome back. I hope you're all doing good. For today's video, this is one that I've been wanting to do for quite a while, but I haven't gotten around to it as I've been pretty busy lately, and I've not been too active on the social media. For this one, I want to talk about one of ICT's concepts, and I want to, in a sense, apply the inversion theory on this concept. So we're specifically going to be focusing on the FIB, and I'm going to show you how using a failed OTE would be your entry point, right? So let's go ahead and let's dive in, and let's jump into looking at how you can utilize a failed OTE and take that as a retest and use that as an entry point. So first of all, we are looking at the S&P Mini, and I'm just going to be using this one in the example. We are looking at Friday 19th of May 2023's data. So in this example, let's go ahead and take the FIB, and let's apply the FIB from high to low, and let's extend that FIB. So in this example, let's say I was bullish, hypothetically speaking, and I was expecting price to come back and give me a long at the 75%, and I was looking to buy. But then quickly realizing when price did not reject, price came right through that 75%, that OTE, and price just started trading down. Quickly realizing and then changing my bias, and then targeting one of these fair value gaps to the downside as possible short target points if I wanted to be short for that specific session, realizing that my long idea was not gonna come to fruition. So let's take this view and then let's shift down into a lower time frame, and let's go from there and look at entry points and how you would look at this and utilize this idea in your trading. So taking a look at the 5-minute chart over here, we can clearly see that price came down. It gave a solid close below the 75% retracement over here, and price did not show any willingness to reject that level and trade higher. So with that idea in mind, and if you look at your charts, then you look at these fair value gaps at the bottom, and you might realize that you are bearish for that session and you will not expect longs. So then how could I utilize this failed OTE or inversion OTE trading idea to take a short setup and then target these equal lows right over here, these equal lows right there? In a sense, that would be a draw on liquidity. Then we also have this low right there, which is another draw on liquidity. So looking at these levels and then expecting price to trade back to these fair value gaps. So then taking this idea down into a 1 minute time frame. Let's look at the 1 minute. Okay, looking at a 1 minute chart now, we can see that price again did not really offer any rejection in this area. Obviously, you should be taking your trading ideas from the higher time frame and only executing on lower time frames, as the mother or the higher time frame would be the parent to the lower time frame. So looking at that idea, we can see over here we had 75% retracement, and we started trading lower off of this idea. In this particular price swing, you could have used this bearish order block, which we have right there, this breaker block. My apologies. This would be a breaker block. You have a swing high, a low, a higher high, which then takes the stops, and then that trades down below. And note that I am looking for a candle close below this breaker block, which over here we open up, we trade up, and then we come down and we close down lower below these equal lows, which would be a draw on liquidity. So with that idea in mind, this breaker block idea, targeting these fair value gaps, obviously we could take these fair value gaps and we could divide them in quadrants, and we obviously could then be targeting the high, the mid, and the lower quadrant of this fair value gap. Looking at entry point below this breaker block, targeting the high would give you 4.7 handles. Targeting the 50% would give you 8.5 handles. Targeting the low would give you 12.5 handles, which, as ICT explains, is 5 handles is more than enough for any beginner, and 5 handles could be enough to build a career. And for anybody else that is more seasoned and has been trading longer, 10 handles is more than sufficient to make what you have to make for that specific day, or perhaps that specific week, depending on how you trade and what type of trader you are. So let's go ahead and apply the risk to reward so you can clearly see how that would be outlined. Okay, so if I took this position, I would have a stop above this high over here, which is 6.5 handles, which is, in my opinion, a fair stop loss. It's not too big. And if you look at price over here, we had this rejection from this breaker block, which again, you can go ahead and you can measure this breaker block, and you can see that we rejected from the 75% quadrant of this breaker block, and price immediately rejected that and started trading lower, which off of the rejection you could have taken your entry point. And then price subsequently traded lower, and as price targeted this top fair value gap, you could also have expected the lower one to be filled. If we just quickly go back up to the 15-minute, and we just quickly go back to this piece of price action and take a FIB, and we overlay low to high, you can look at 50%. 50% is right there, so we are looking for anything in a discount, which would be this fair value gap at the bottom. So that is why that is a very, very good point to reference when you are looking at specific areas to take your profits. That would be a very good point to take profits at the high, which comes in at 15 handles. Then obviously you could take something off at the middle, which is 16.5 handles, and ultimately at the low, which is 18 handles right there. And then price reverses and retraces back up, taking out this equal high right there. That would be one of your entry point ideas taking this specific trade. Now, a second entry point to this trading idea would be if, for instance, we were looking at this wick and we measure this wick and we look at the 50%, which that is right over there. We can just go ahead and take a note of this, take a note of this, and we could also take a note of the higher quadrant, of course. Here we go, and then we can get rid of this FIB. Let's just go ahead and mark this up, and 50% of the wick, consequent encroachment level. There you go, there's that. And then you have the 75% level of that wick, which you could expect a rejection off of both of those points, overlapping with a fair value gap right over there, overlapping with stops that were taken right there. Buy side liquidity. In one sweep move that was done, and then obviously you could be targeting several of these areas after taking a entry inside that wick. As soon as price rejected, we have a fair value gap over here. We also have a breaker block right there, which that could also have been a potential target for you. As you could see, that price did consolidate in this run, and it did clear these buy stops, which took those out, and then price ultimately continued rallying back down. You could also have taken a target at these equal lows, and then you have these all lows down here, which if we go ahead and we apply our risk to reward, I would have a stop above the fair value gap. Looking at ICT's 2022 mentorship rules, I would place my stop above the candle that created the fair value gap, or if you wanted to give it some more room to breathe, you could place it above this high. That's depending on what you prefer. Then of course this fair value gap right there, that's 5.5 handles, which is a good salient point to take a partial or to collapse the whole position and be happy with that. We also did trade the midpoint, as you can see there. We did trade the lower quadrant, and then we also have this breaker block right here, which we filled that in. That was 8 3/4 handles. And then we came up to clear these stops. After doing so, we came down to this equal low over here, which, as you can see, to take a recap on the video, since I did stop the recording yesterday and I am resuming it today, we were talking about this fair value gap in here, which we took out the buy side liquidity. We also had the consequent encroachment of this wick and the 75%. We traded up and we had a rejection block, or price rejected. It showed a willingness to reject from this fair value gap up here. After that, price traded down and 5 handles was easily accumulated from entry down into this fair value gap over here. 5 handles would easily have been achievable if you were targeting the consequent encroachment of that. And we had a breaker block down here, which would easily have also given you more than 5 handles. Ultimately targeting this equal low down here and targeting this fair value gap here, which was a 15-minute fair value gap. Let's look at a last example of this idea. Let's look at this particular swing, and then we have this fair value gap as well as this one down here, which we will annotate, expecting a move lower. Let's say you were looking at this idea and you were expecting price to continue trading lower. Let's take the FIB. Let's pull the FIB on this swing. You would then expect price action. Let's extend the FIB through. You would expect price to trade down into this 15-minute or fair value gap. Let's go ahead and look at some higher time frame analysis as well. You see, there we go. There we have the same fair value gap idea, resting below price. So let's go down into the 1-minute time frame and let's see how we could have applied this failed FIB trading idea or inversion FIB idea to find a setup. All right. Okay, so price trades up and then price comes back down. Obviously not respecting the 75% as you would have expected it to in this particular swing. Price trades right through, no rejection at all. As you can see, price rejects and trades higher. So looking at this idea and noting that price closed above 75% and then it rejected that idea, we could then look for a trade long. First of all, you would then have to go to higher time frames to find areas in price where you would be able to take targets, like this 5-minute equal highs. That would be a potential target. There we go. That would be a potential target. Then looking higher at the 15-minute. You see, we see the same idea. We can then go even higher to a 1 hour. Looking at the 1 hour chart, we can see that to the left, you can see that we have these equal highs and this fair value gap resting in price right there. So that will be my draw on liquidity for that specific time. So that will be a 1 hour fair value gap, or referred to as a busy, referred to as a SIBI, excuse me, because that would be a. So looking at this idea, we would also look at this equal high, equal high. By the way, this would be a SIBI, sell side imbalance, and it's inefficient in its buy side delivery, which we would then expect. Then dropping back to a 1 minute time frame, we can look at what do we have over here. Let's go back. Here we go. Back to our setup. So looking at this idea, let's just extend these lines as so, and let's go ahead and pull this back. So looking at this whole trading idea, we can relatively say that, okay, looking down here in the corner, we can see that we are in a silver bullet from 10 to 11 a.m., which we could utilize that time. So 10 to 11, that's a silver bullet, and we can go ahead and we can utilize that to our advantage. That would be what you would be looking for if you were trading this specific idea. After your short idea from this high to this low, measuring that swing, looking for a premium, expecting the 75%, which is right over here. Let me pull this over. We are working in this area for now. Looking at this, we can see price traded above that, and it rejected it on the next candle. It got a rejection. So looking at that whole idea, and then changing our bias to a long, realizing that we have equal highs resting above us, and we have this 1 hour fair value gap and this 5 minute equal high resting above us. We then want to look for a long setup. We can then take note that we had a breaker block down here, which price traded that. It respected that. It traded higher. And then we had this fair value gap. We had this order block down here. Price consolidated around this area, respected that, and then rallied up higher, giving us multiple aggressive market structure shifts. Note that we also took out this liquidity resting down there. So that's all confirmations that will add up, and they will give us a more solid trading idea. So looking at that, it gives me the confidence that I need to know that, okay, we are going to be long because price action is respecting bullish order flow. We have a volume imbalance right there. If you just look at this candle and that candle right there, how price jumped and it made a gap, that's a volume imbalance. We then have a fair value gap over here, which got respected. Price traded above that, rallied aggressively. Now, looking at this and focusing specifically on this fair value gap, since we would not have been we would have sat here since 10 looking at this chart, and we would obviously have expected a rejection lower on the 75, which we did not get. We got a solid run through and a rejection to the upside, right? Correct. Looking at that, I would have wanted to see price fail this order block. I would have wanted to see price failing this order block. I would not have wanted to see price respect that. I would have wanted to see it fail, break market structure, give me a fair value gap, classic 2022 ICT model, and then I would have taken a possible short entry on this idea, and I would have targeted these lows, and I would have taken a target at that low, and then obviously we had the fair value gap down here from the 1 hour and the 15-minute. That would have been the idea that I would have looked for if, for instance, we were looking for shorts. But as soon as price took out this high, it traded back to this order block. And take note again in this piece of price action that we have another volume imbalance over here. It does take some practice with those in order for you to be able to see them in price when they are small like that. So take note that we traded that area and we had an immediate rejection. From that would have been enough right there in itself to take a long position, and I would have then had a stop. If I took this entry, I would then have had a stop loss. You can see we have a fair value gap over here. We obviously have the order block, which was respected, and then we have this volume imbalance. So I would have had a stop loss below this volume imbalance over here, which is 6.5 handles, and I would have had a target at this equal high, and I would have taken a target at this 1 hour fair value gap. Now obviously we will be placing our quadrants. Please don't mind the 25% being at the top and 75% being at the bottom. It's just the general idea that we have our 4 quadrants of this fair value gap. Let me just go ahead and get this fixed. And you could have taken a target at the midway, you could have targeted the low and then the high, of course, which you can see price did eventually fill, and those targets would have been hit. Let's place the risk to reward right there, and the low would have been, our stop could have been there, or you could have placed it down here if you wanted to be more forgiving, since we know that the volume imbalance can be traded through. It gets more leeway than the rest of ICT's PD arrays. So if price trades in and around this area, we can expect price to gyrate. So we give it some wiggling room by placing the stop below this low over here. And then we have a take profit above this equal high, which would be 12 handles, 12.25 handles. And then we have the take profit at the 1 hour fair value gap low. That would be your take profit point. I would personally, if I took this trade, I would take a partial above the, once this high forms and I get this fair value gap coupled with this equal high, which would then be a PD array with this fair value gap, and these order blocks down here. We also have a gap down there. I would expect price to trade to these areas and continue higher. Once it trades above this high over here, I would take a partial at 8 handles. Upon taking the partial, I would then take my stop, and I would then break even my stop loss. Since 8 handles is more than enough for any beginner, and for most advanced traders, that would be a good day. And then you would hold whatever position you have left. For second partial, take profits at 13.25 handles. That would be a second scenario on this specific trading idea. That's how you would use, in a sense, the failed 75% trading Fibonacci OTE entry pattern idea. It's, in a way, it could be complicated because if you were specifically looking for a short in this area and noting that price only closed with a solid candle, closed above it and then rejected it, and you were not in line with this order flow, or you did not realize that price was reaching higher after seeing, okay, we had this rejection, so we could possibly be looking for long ideas, then switching your bias. Now let's look at a second entry. Let's say you did not realize that price was trading up higher after just this one idea. So what you would do is you would look at this fair value gap over here, and then you would mark out this fair value gap right there, and I would have the order block I would have these noted. Okay, so price could come down, trade this fair value gap, we have this one down here, and we have these order blocks, and then we have this wick, which we could mark that, and we could find consequent encroachment of this wick. Okay, so we got 1, 2, 3 PD arrays right here. We have fair value gap, and a order block, and a wick resting below, which would be a 4th PD array. If price fails this fair value gap, trades through it, comes down into this one, trades through this one, comes to the order block, and trades through the order block, closes below this price action, then I would be confident and I would say, okay, we are looking for these lows and these lows down here. That's how you would check to make sure that you are in sync with the order flow. Just look at how price trades at the PD arrays as well. Noting that it trades the fair value gap, trades into it once, it rejects that fair value gap. Right on this rejection, you could take an entry right there. And again, the stop loss would be fair value gap, breaker block. You could have a stop below this order block, or you could choose the midway of the consequent encroachment of this wick. Could be a safe area for your stop. And then of course you would have your first target at this 1 hour equal high. In this case, it would not be beneficial to take a partial at this high, but what you could do, you could take this fair value gap and you could measure up to this high. You could find 50%, which is over here. If we look at that, that gives you 4 handles. You could take a partial at this specific area if you take a measure of that move, or let me correct the FIB. Let me just pull this thing around. Here we go. You could also take a hold on, let's pause a second over here. Looking at the proper entry point, which would have, yes, it would have been right there, yes. Right at that candle's close. As soon as it rejected, that would be an entry for me. So looking at, again, looking at the midway, that would be a good 5.5, 5.25. That would be a pretty good partial. For me, that would be a pretty good partial point, and then you could take a profits above this equal high at the low of this 1 hour fair value gap. Another good partial would be the 75% of the range between this high to the low of this fair value gap. That would be 6.5 handles. Another idea that you could utilize is by taking your FIB, and we could take this low. Let's take the bodies of the candles, this low to the highest body candle, and we could put the extension on. And if you could just let me get rid of this because this is being noisy now. If you look at this idea, then right there at 2, that would be a full 1 standard deviation projection of the range from this low to this high. Project that out in time, and that would be a full standard projection. And you also see that you have half a projection right over here. Let me switch this thing around as to not you know, get confusion. Look at that over there. See, you got half of the swing right there, you got 1 standard right there, which would be a really accurate and really good point to take profit and take a partial over here. So I'll just throw that in there. So have your notebook open. That's the part where you write down some notes and you make some annotations and you take a screenshot, because that's a extra tip. So that would be another idea or approach to taking some profits. So hopefully you've gained some insight from this one, how you would be able to use the Fibonacci tool if it failed in your original expectations, and how you could take that idea and you could get back in sync with order flow by looking at the higher time frame, and then realizing, okay, we took this sell side liquidity down here, we aggressively traded through the highs, taking buy side liquidity. Where could we go next? We should be trading higher. If we get that whole premise and idea, we should then get a retracement back into optimal trade entry around about this area to go higher above these highs. Where would we be drawing to? We would be drawing to these equal highs and this 1 hour fair value gap, and you also have a order block resting inside there. That would be the draw on liquidity. Ultimately, this high over relatively equal highs over here, which you got right there, that would be your draw on liquidity. So hopefully you have gained some insight from this video. Hopefully you've learned something new, and I look forward to seeing you in the next one. Until then, good luck and good trading.